actually Nifty has managed to hit the 4-month high this series. It's up almost 2% for the series run so far. Nifty Auto, that's been the top gainer. It's gained as much as 7% in this month itself, and even FMCG managed to hit an all-time high. It's been up almost 5% in this series itself. Kunj, what's your take regarding the entire FMCG basket, Britannia, which is at all-time high, ITC, etc.? What are the best names to play this theme?
Yeah, so obviously when market has been moving up, we are seeing the participation from multiple sectors coming in the market, and by rotation, there will always be some outperformers and some underperformers. So in terms of outperformers, as you said, FMCG has been one, auto has been the other, the underperformers have been, let's say, metals. Now, within FMCG, if we look at the result numbers, they haven't really been very encouraging, which although was on the expected lines. So there wasn't any expectation of a great volume growth or a revenue growth coming in. And to that extent, the results have been subdued. But yes, the market is seeing a lot of money coming in, especially the global inflows that have started. So they always in the first round of investments look for quality names, and which is where FMCG comes in. Net cash flow companies having existing cash, high brands, high distribution. And that's where we have seen the buying interest coming in the FMCG. On an intermittent basis, we can continue to see that. But in this kind of market, probably one should also move away from the momentum and look at some of the corrected stocks where the pricing trend, the quarterly number trend seems to be an improvement. So if I look at it from that angle, cement sectors is something that comes to mind, that which is where there are some signs of performance improving, both in terms of the volume growth as well as in terms of the margins, and the prices haven't moved as much for the stocks.
Kunj, in this entire market recovery, why has Reliance not participated?
Yeah, I wish I had answers to such simple questions.
There are very few things you don't have answer for. You have this reputation. Come on, you live up to your reputation.
So
every time I'm in doubt, I call you for an answer.
No, thank you very much for your confidence in me.
No, just that known each other, I mean, go back to the same hometown. We were, our school had just one compound wall. St. Anselm's and St. Paul's, right, Kunj Bansal?
Yes.
एक compound की wall थी बीच में. That chart wala was also same, remember?
Sure, can't forget.
Okay, Reliance now.
So whenever markets move, there are a lot of stocks which go through. So typically there is a life cycle. If I look at it on a longer term, in terms of pricing or in terms of valuation for the sectors as well as for individual stocks. So there'll be stocks which will have a long consolidation or underperformance, and they'll come out of that either by improved financial numbers or by sudden noticing of market, or by lack of availability of other stocks at a reasonably financial number. So they will have a sudden interest coming in the market, and we'll see sudden sharp outperformance. And after such a sudden sharp outperformance, which may happen in 1 year, which may happen in 2 years, which may happen in 3 years, there is again a consolidation phase which comes in. So I, as I said, I don't have a specific answer, and neither I think that there is a specific answer to this.
It's seen a lot of false starts, right, Kunal? Reliance. Just not living up to its...
Yeah, right now there is no start only for Reliance.
Yeah. No, it had a start like April, this rally will be led by Reliance.
Yeah, so it had a move for itself, but then the move fizzled out the sooner, the stock went into that breakout mode, or there was an anticipation of a breakout. So it's very difficult to anticipate trends and the kind of forecast which we typically do for charts, looking at large cap names for a stock like Reliance, because then the stock has this habit of going through 70%, 75% of the trends actually go into phases of pause for Reliance Industries, where the stock consolidates for that much of time, and the next 30% is where you see the stock trending up higher. So if you happen to buy the stock at the fag end or even at a middle point of an ongoing uptrend, the risk reward doesn't get into the favor. So I think it's always better to buy the stock on consolidation. Like for example, today the stock has bounced off from 2450 levels, which is again a midpoint of this last 150 200 point up move for Reliance Industries. So again, for a contra trader or for one who's looking to position itself into the large cap name, these are good levels to buy the stock.
Maybe an MI win, Kunal, could bring some cheer. I don't know. Maybe. Okay. But what's the buzz across dealing rooms? Sharad is here with all that khabar. Sharad?
Well, yes, in focus we are having Metro Brands, and what we are gathering from the dealers is that a domestic fund house has been buying the stock in the day straight today. And do remember the company is meeting an FI investor also today, and over the next week itself they'll be making big names such as Bank of America, Motilal AMC as well as Sparks Group Asia. Now looking at the DI numbers, they are holding almost 5.3% stake in the company, but most of the AMCs are holding the stake below the 1% of shareholding pattern. But the key names are coming such as UTI AMC, Sundaram AMC as well as Kotak AMC. Apart from this is also promoted by Rekha Rakesh Jhunjhunwala, holding almost 14.4% stake in the company as well. But do remember, of late there has been a pressure on the stock because of the Q4 numbers which had come in weak, but in today's days of trade the numbers have been good when it comes to the volumes, and also the stock has been buzzing on the positive side. Apart from this, the key triggers ahead, of course, is the most important thing is that the aggressive retail expansion is expected to take place for the company, in which ROE numbers might be under pressure going ahead. But for the margins itself, there is a positive outlook, especially for the in-house products which the company is going after, which will actually entail higher margins in the product shelves. Apart from this, also the street is expecting more clarity coming in on the growth plans of Cravatex, and because of that adjustment, the Q4 numbers are also weak.
Thanks, Sharad, for that. The latest update coming in as far as Metro Brands is concerned, we of course spoke with the management yesterday and they talked about the sustainability of 30% margins. But what's really not sustaining is the momentum in defense stocks. Well, Garden Reach, disappointed with its earnings yesterday, has been seeing a cut of around 5% today, and you just had numbers coming in from Bharat Dynamics, and that suddenly took a knock of almost 7 to 8%. Let's pull up the intraday chart, and yes, you see that sharp nosedive happening, and that's because the EBITDA is down 52%. The profitability has come down to 153 crores all the way from 265 crores, and revenue too sub 800 versus 1350 crores. So quite a bit of disappointment. Yes, these are long gestation businesses, so quarterly performance could be a bit choppy, and that's exactly what's happening with the stock prices as well, a bit choppy. But what are the expectations coming in from Sun Pharma tomorrow? Shrishti is standing by to tell us the key expectations.
Okay, so talking about Sun Pharma, this time a weak set of numbers is expected because we are expecting a sequential decline in all the headline numbers for Sun Pharma, and that's on the back of a weak geography mix. Because if we look at the internals, then this Q4 is a seasonally weak quarter for their India business, but nevertheless the company is expected to outperform a bit of an expectation thereabout. 9 to 10% growth is what we are expecting in their India business. But the key is the US business. There what they are facing is that this particular quarter will have the full impact of their Halol plant import alert, and this is the first quarter that will have the full impact of that, and that will actually offset the growth and the resilience the Sun Pharma is showing in their specialty division. Over there we are expecting a sequential decline on a quarter-on-quarter basis, and the analyst expectation is that US sales should be around $400 to $420 million. All of these factors are expected to report in their numbers, as well as we are expecting a inch up in their R&D expense to 6.4% this time around. But let's talk about numbers, and the revenue is expected to see a decline of 3% on a quarter-on-quarter basis. EBITDA expected at 2,585 crores, and even the margins are expected to see a cut from 27% near about to 23.8% this time around. And lastly, onto the profit figure, we are expecting a decline of 14.5% at 1,854 crores is the expectation. But the key to watch will be the management commentary, especially when it comes to the US pricing as well as the new product launches going ahead.
The expectations from Sun Pharma, but Shrishti, since you're with us, talk to us about M&M as well. What are we expecting there?
So for M&M, we have seen that the product mix wasn't that great this time around, because the tractor division saw a sequential decline of 15% in their overall volumes, while the auto volumes were supportive. They have seen a growth on a sequential basis, and reflecting into the numbers, the revenue and the top line is expected to be flat at 2,108.99 crores is the expectation. EBITDA expected to be flat on a sequential basis, 2,815 crores is the expectation, and the margins margins too expected at 13%, but the profit is expected to see a decline of 20% on a sequential basis because the depreciation as well as the tax cost is expected to be higher, and we are expecting 1647 crores in the bottom line. So all in all, the product mix wasn't that great, although the auto volumes as well as the margins are expected to be supportive. So that's the expectation from M&M. Let's see if there is any surprises on the margin front.
Kunj Bansal, it's just a coincidence that every auto company also goes through its unique cyclicality. There was a time Maruti was the numero uno. Then last 12-18 months have been dominated by TVS and Mahindra. Next 18 months, will they be dominated by Tata Motors, Mahindra or by Maruti?
So the auto industry itself is cyclical in the first place. But yes, when I say that, I am talking of the industry as a whole. What you said is about the individual companies. So yes, that is quite likely. So we know by now, having been in the market for so long, both of you close to 3 decades, that managements keep reinventing themselves, keep looking at newer and newer ways to increase market share, along with profitability and along with cash flows. Now, for that, they have to do a lot of things. In case of automobile, they have to, first of all, specifically look at introducing new models. Then, of course, make sure that the new models are success by way of innovative marketing, by way of routine marketing as well. And then make sure that there are collections, there is a pricing power and things like that. Now, it has so happened that for different companies, and actually that's a very good thing, because the customer as a result has had a choice, and as a result individual company has also had a phase of 1 year, 1.5 year, 9 months distributed amongst various companies to make money. So each company has been able to come out with some innovative model. At some point of time, another one came out with some different models at different points of time. And then, of course, there were some industry headwinds and tailwinds. Till about 6 months ago, we had headwinds in terms of the pricing. Metals prices were remaining high. Now metal prices have started to correct. The high raw material prices inventory has slowly got over. Little bit of pricing power was an issue. Interest rates were going up. Financing was an issue. But now RBI has paused interest rates. 10-year G-Secs have come below 7%. I don't know if that's an indication that not immediate future, but let's say 6 or 9 months down, will we start seeing the interest rate coming down? So that is what will again act as a tailwind to the industry. The biggest, amongst the other biggest headwinds has been the crude prices, which have continued to result in high petrol prices in India. So these have been the factors, and it has been to the ingenuity of individual company that they have been able to try and find success formulas within this overcrowded space.
Time to get in some BTST trades as well going while we wind up for the day almost. Kunal, what's on your list?
So I'll go with the mid-cap name RAC Limited as a buy. Targets of 138. Stop loss could be kept at 126. In fact, the stop loss could be up to 129 from current levels. And the second, in fact, would be a buy on HDFC Bank. As I said, that the stock is extremely oversold. Would go for a contra buy over here. Targets of 1660. Stop loss at 1577.
Right. Vinay, any BTST ideas that you may have?
Yeah, so I'm recommending Lemon Tree because hotel sector is looking good, and Lemon Tree is today has given a breakout from the consolidation. So around 97, one can go along with keeping a stop loss of 95, and on the upside 101 should be the target. So that is the only one I'm recommending for the BTST.
Any name from the new age tech, because now we have enough chart history, Nykaa, Zomato, PB Fintech and the likes? Vinay, the question is for you.
Yeah. So basically, Nykaa has been passing through the negative territory, and lower tops, lower bottoms are there. So there is no traction in that. But yeah, Zomato is looking relatively stronger on the chart. So looking at the chart setup, it looks like that it has given a medium-term breakout. So Zomato looking good and heading towards the 70 level. So keeping a stop loss of, let's say, 62, one can remain long and keep on trailing basis stop loss. And setup is looking stronger in this new age technology companies.
Year ago, 38.5, doubled. But it is still down more than 50% from its 52-week high, which was at 150, I think. So glass half full, glass half empty, right? Like 50% up from the recent low, but 50% lower from the all-time high. Kunal, glass half full, glass half empty. Which is a better way of looking at it?
Half empty.
Which means it should go down?
Which means it should full.
Oh, full glass. Acha, 150 rupiah. 1 year?
Not 150 rupiah. I mean, I mean,
Full 150
I like to
rupiah.
ride the trend on the upside, so it's very difficult to preempt how far this trend would sustain. But yeah, I think so. So we've been discussing Zomato from that 50-52 levels just about a month and a half out back towards 64 or 65 where the stock was yesterday or day before, and now at 67, 68 levels where it's confirmed breakouts on all legs, short term, medium term as well. So we'll continue to ride the uptrend for Zomato.
Kunj Bansal, it's now almost like a folk story that Indian hotel industries are doing very well. Personal experience from uncles and aunties, they're telling us that this year it's going to be a year when hotels will make more money. Markets know that, and markets have repriced some of these stocks. Stock like Indian Hotel from the COVID low is up 6 times or 6.5 times. How do you value a franchise like Indian Hotels? Would you be happy to keep the stock for another year, year and a half, 2 years?
So what happens is also, let's look at some background. If we leave aside the period post-COVID, in terms of industry performance, it was always there. Before COVID, quite a lot of hotel companies were making good money. Depending on the economic cycle, their pricing were really high, and so was their occupancy rates, and as a result, the profitability. But if we look at a reasonably long period of 5, 10, 15 years before COVID, somehow the market never gave valuation to the hotels industry. In my view, one of the reasons was the lower return ratios that these companies had, lower return on equity, lower return on capital, and things like that. Now, partly as a result of COVID, wherein the issues came, partly in any case, this discussion and understanding was going on. These companies have realized that they need to make higher return on capital, higher return on equity, at least cover the cost of capital, and they have changed the model from owning the properties to leasing the properties. So along with the business rise, why market is rewarded is the improvement in return ratios. To answer your question, yes, because of the basic change in the business model, the market could continue to reward, although a lot of valuation, a lot of front-ended growth has already been built into the current price and the current valuation, but still there is a possibility.
Right. Okay, Kunj, great to have you on the show. Thanks
Thank
for
you.
joining in. Vinay, we let you go also on that note. Just closing